Hello and welcome to Buy Africa, the show where we focus on investment opportunities around the continent. I'm Tsepo Modiba, and thanks for joining me. Tonight, I'm joined by Ayalanesh Tafese, Head of Country Risk at Rand Merchant Bank. Ayalanesh, thank you for joining us as always.
Thank you for having me.
I'm quite excited about our discussion today, talking Ethiopia. Can we just take a step back before getting into details? Let's look at the country. How have they been doing? What's the structure of the economy?
Yeah, so I think that's really a question that I get a lot. Is it's not a country that's rich in resources with oil and gold and that kind of thing,
right.
But they've managed to post really high growth rates of between 6 to 8% over the last decade. So a lot of investors wonder, where is this coming from? Is this something that will be sustainable?
Right.
And I think in order to answer that, I think we need to take a step back and sort of look at Ethiopia's growth over the last 20, 30 years. I think if you look at Ethiopia's growth between the year before the year 2000, I think it was really a time characterized by wars, coups, famine, drought. So, and the economy didn't really have a lot of breathing space then to develop. So you had periods and constant periods of deep economic recession. What did happen in the year 2000 is the war with Eritrea officially came to a close. You had Ethiopia completing debt relief under the HIPC debt initiative. And that really freed up policymakers' minds to start focusing on economic growth.
Right.
So between the year 2000 and now, Ethiopia has gone through 4 successive programs aimed at poverty alleviation, really focusing on things like strengthening the agricultural sector, things like building infrastructure from farm to market and that kind of thing. So it's been more than 16 years of these 4 successive programs targeted at that. And with sort of improvements in the agricultural sector, you start seeing the services sector that piggybacks off of that improving. Over the last 10 years or so, we've seen a lot of privately owned Ethiopian banks coming to the fore. So slow and sort of a build-up of improvement over the last few years.
From a demographics perspective, are we talking a young population? How large is the population in total? And I guess from that, what sectors are thriving?
So in terms of the population, it's a population of around 100 million people.
Right.
So second only,
big.
It is huge, second only to Nigeria.
Right.
So, and over the years, I think with the economic growth, we've seen a lot of poverty alleviation happening. The World Bank did come out and say that poverty rates have been reduced by around 30% since the year 2000. Right. So you have a population, a big population and a growing population, where poverty is reducing, incomes are rising, and I think for a lot of investors looking at sort of the fast-moving consumer goods area, this does present a lot of interest and opportunity. I think as a result, over the past couple of years, we've seen the likes of Heineken, Coca-Cola, even Unilever starting to sort of take notice and sort of increasing their footprint in Ethiopia.
From that, what is the environment like from a regulation perspective to encourage foreign investors from the rest of the world, but also probably just as importantly from the rest of the continent?
So I think in terms of a foreign investment perspective, it's something that's relatively new to Ethiopia.
Right.
I think historically the economy has been sort of very government-led. It's government-led infrastructure and that kind of thing that's been driving a lot of the growth. So attracting foreign investment is something very new that they've started targeting. That being said, with the government playing such a pivotal role in the economy, there are certain sectors that they haven't as yet opened to investors. And these would be like your banking. They don't allow foreign investors into those sectors. Something like your telecoms, that remains something that's only open to Ethiopian investors.
I'm assuming that's a function of both wanting to have an element of control and have those areas not blow up, but also I'm assuming they're quite profitable.
They're quite profitable for the government. And you can imagine if you've come from sort of a very state-led development model, they're not going to open the floodgates to foreign investments all of a sudden. It will be something very gradual and very slow. And what we're seeing now is sort of Ethiopian policymakers wanting to position the country to a more industrialized space. They really want the manufacturing sector to grow. And that seems to be the area where they're now currently courting a lot of foreign investment.
So is there potential that Ethiopia then becomes the manufacturing hub for the continent?
That is their hope. You see a lot of articles these days coming out talking about how China is looking for the new China. As incomes rise in Asia,
right.
The labor costs are rising in Asia as well. So a lot of manufacturers in these countries are looking elsewhere where there are lower labor costs. And I think that's where Ethiopia can play a role. A recent study by McKinsey showed that actually to produce a pair of leather shoes in Ethiopia, the labor cost per unit for that in Ethiopia is about 1/5 the cost of that in China. So there is a compelling case from a labor cost perspective. At the same time, I think the government is aware that this is something that a lot of investors are interested in. And from their side, what they have been doing over the past couple of years is they've been building these large-scale industrial parks. They finished one last year, which is probably in Hawassa in Ethiopia, which is probably the biggest in sub-Saharan Africa, and has the capacity to do about $2 billion worth of exports. Wow. So, and they're probably building around 15 or 14 of this and inviting foreign investors to come and move their manufacturing operations there.
Beyond these industrial parks, what does Ethiopia have to do to achieve this goal? What do they have to do to make sure that they take advantage of this potential?
I think, step one would be these industrial parks. I think they have been successful at getting some foreign investment into the country. I think as a result of these initiatives, I think the industrial sector of the economy has grown from 10% of GDP to around 17% of GDP in a matter of 10 years. So it's definitely something that's growing really fast. That being said, I think in order to continue allowing investment into something like this, you really need to improve infrastructure, electricity supply to these industrial parks. So making it more attractive and a compelling case for foreign investors to move their entire operation there.
Right. So I guess as an international investor or foreign investor, you're not just looking at manufacturing sector, you're probably looking at infrastructure as well and participating in growth in those areas.
Yeah, absolutely. There's been a large outlay of government expenditure on infrastructure over the last few years. One of the big sort of flagship projects that everybody talks about is the Grand Renaissance Dam. This is a dam that they're building on the Nile River itself, and it's going to generate electricity, which the government is hoping will be enough to start exporting to the rest of the region. So, a lot of companies that are looking at things like the construction sector, we've seen companies like Dangote in terms of cement looking to Ethiopia as one of a key market for them. So definitely, if you are in the construction space, that will continue to be an area where Ethiopia will invest in.
I love these discussions. We've taken a very positive stance, but what are the risks? What should investors or are investors concerned about within the Ethiopian market?
Well, I mean, its geographical location, Ethiopia, it makes it very sort of susceptible to weather patterns.
Right.
And unfortunately, since 2015, Ethiopia has undergone one of the worst droughts that it's seen in over a 50-year period. And that definitely did cut down on growth. We saw growth rates coming from highs of around 8 to 9%, and they currently sit at around 6%. Right. So the economy remains very vulnerable to these weather shifts. That being said, what is encouraging to see is in previous years, when they would go through these periods of drought, the economy was not prepared for it in terms of having enough food stock, having a diversified economy where you could look elsewhere for growth. And in previous years, a drought would have meant an economic recession.
Right.
What is encouraging to see now is you'll see growth tapering a little bit, but you're not going to go into that recessionary phase.
You're talking about 5% as a slowdown, which most economies would be more than happy with.
Absolutely. If you sub-Saharan African average is around 3% growth. So 6% growth is still quite positive, but it still remains quite a vulnerable economy to these things.
And the geopolitical landscape, is that fairly calm?
I think from a political perspective, that's also an area where investors are beginning to see risks. Right. Towards the end of last year, we saw quite a lot of protests and uprisings happening in Ethiopia against some of the government's actions and that sort of thing. And since then, the country has been under a state of emergency. And what that means is within Ethiopia, sort of access to information is limited in terms of, accessing social media. And as an investor standing outside of Ethiopia, getting information out of the country becomes quite difficult. So from that perspective, from the political side, there is a little bit of concern. I think for investors, a little bit of alarm bells were raised when during these protests, some foreign assets were damaged. Right. So what we are seeing is, we're not seeing investors pulling out of Ethiopia as a result, but they definitely are pricing in this sort of increasing risk premium.
So taking into account, I guess the increase in geopolitical risks, but also the huge potential that we've spoken about, where does that leave your overall assessment of Ethiopia as an investment destination right now?
Well, I think investors are still very much interested. And if you look at the numbers, FDI is still pouring into the country. Right. In the last sort of few months of 2016, when a lot of these protest actions and the state of emergency happened, Ethiopia actually managed to get about $500 million worth of investment in those months alone.
So what protests?
Exactly. So I think from an investor's point of view, so far, I think the possible benefits in terms of labor costs and tax incentives that the government is offering, and the growth opportunities in terms of your consumer goods, that outweighs the risk. They are able to mitigate those risks and they're able to price it in. So I think from an investment perspective, you have that risk reward balance is still quite favorable for investors.
Right. So we're likely to see a lot more conversations on Ethiopia as it becomes another darling of the continent.
Absolutely. I think, for a while now it has been posting growth rates. People have labeled it, one of Africa's growth lions and that kind of thing. So it has started to get a lot of attention. I think now with the government's focus changing towards this industrialize the country model, they will be more serious and more formal about getting FDI in. So you are starting to see sort of the growth in interactions between the investor community and the country itself.
How does the current, policy framework of Ethiopia fit in with the rest of the region, which has fairly decent integration? How are they aligning themselves with the rest of the region?
You are starting to see, certain areas. For example, Ethiopia is a landlocked country. It doesn't have access to ports. And what it recently did is it built a railway between Ethiopia and Djibouti, which now effectively connects the two countries. They do have agreements between the two, which will allow sort of the movement of goods between the two countries to be, to increase. I think for an economy like Djibouti, that brings about, you have a port. It's now going to be used more. It's an income source for you. Yeah. For Ethiopia, it does sort of bring a little bit of security in terms of the imports that they're able to get as a landlocked country. So we're seeing that sort of integration. The Prime Minister was recently in Rwanda, and a lot of people draw parallels between Rwanda and Ethiopia, two economies that are more focused on things like manufacturing and services. And there seems to be a lot of, agreement to work together and build on certain things together happening.
I guess two economies that aren't as heavily impacted by commodity prices and the swings as the rest of the continent. Does that make, overall the outlook for Ethiopia a little bit more clear in terms of the path of likely growth going forward?
As I said, there are a lot of positives in terms of, you're now building an industrial sector, you're getting more foreign investment to come into the country, the infrastructure space is booming. So from that, I think we will still get pushes for growth in Ethiopia. But you have to balance that against the vulnerabilities. It doesn't have the same vulnerabilities as a commodity dependent country, but that doesn't mean that it's impervious to anything. I think simply looking at what has happened to growth due to weather patterns, due to the political issues that we've seen, indicates that vulnerabilities still remain. But I think from an investor point of view, you just have to shift your mind to understand Ethiopia's specific vulnerabilities and sort of price that into what you do there.
Perfect. Let's leave it there. Thanks to my guest, Ayala Nesh-Tafese, Head of Country Risk at Rand Merchant Bank. That's all from Buy Africa this week. Remember to follow me on Twitter. That's @Mudiba_Tsepo. And send us your thoughts about the show using the hashtag BuyAfrica. For myself and the team,